Nigeria's external position is under renewed pressure, with foreign reserves dropping from $40.87 billion in December 2024 to $38.31 billion by March 2025. An unmistakable sign of heightened capital outflows, reflecting deepening domestic vulnerabilities and external headwinds under President Trump's renewed energy and protectionist agenda. While Nigeria's trade deficit with the U.S. improved, the specter of rising U.S. protectionism, particularly in energy and tariffs, pose significant risks to Nigeria's export earnings and import costs. This raises critical questions about Nigeria's internal economic strengths, the viability of its ambitious 2025 budget amidst global uncertainties, and its capacity to navigate evolving global economic policies. To unpack this, I'm joined by Kenneth Erikume, Partner, Tax Reporting and Strategy, PwC Nigeria. Thank you for joining me today.
Thank you for inviting me, Perpetua.
All right, so I went through that report, and I would like us to set the pace first. Let's begin from, internally now. We have the output dynamics, which of course looks good, but it's not as inclusive as one would expect. That's when you look at the GDP. Of course, it grew, but not as inclusive. Now, if you also look at the fiscal dynamics, that's also not good enough, coupled with the January 2025 report on debt servicing, which of course was over 100%, 144% actually of, generated revenue. And if you look away from that, you look at price dynamics, while we could say that there is a level of stability, inflation, of course, irrespective of what we did, we saw an uptick. And that, of course, isn't also looking good. So looking at all of this, considering all of this, and also monetary dynamics, which is neither here nor there, what do you think? Are we looking good internally? Or where do you think we have the most problem?
Okay, so thanks for that question, Perpetua. I think we are looking good relative to the past couple of years, right? Why? Because, in 2023, 2024, we had massive economic shocks, which caused a lot of destabilization and erosion within a very short time of the purchasing power of many Nigerians. And that sort of shock is very difficult to manage, and that's why we had the stark reality of our economy in 2023 and 2024. Now, in 2025, we've seen things stabilize somewhat. The GDP growth rate, there's nothing surprising there. We already knew that GDP growth will be sub 4% in terms of expectations. And whether all the rebasing would actually impact on, on that change is left to be seen. Now, why is that important? It's important because if we're growing at a lower pace than our fertility rate, it therefore means that the GDP per capita continues to drop, which is a very important indicator of the wealth of the citizens. And so if we're not able to grow the economy quickly enough, then we'll continue to struggle. So there's a lot of work that needs to be done in terms of stimulating the economy, mobilizing government assets to ensure that they are productive, improving infrastructure, and then ensuring that we drive growth from different sectors. And I like the point you made around the inclusiveness of growth, because largely we've seen positive movement, largely in the banking and financial services sector.
And we know the cause.
And we know the causes for that. It's obviously the FX, but let's also give them a bit of credit as well, because the new banks have done quite a bit in terms of financial inclusion and penetration. All right,
Mr. Erikume, I'm afraid that we need to go on a very short commercial timeout. When we come back, we'll take it up from there.
Sure.
Glad to know you're still with us. And I still have right here with me, Kenneth Erikume, and we are looking at the Nigerian economy. So before we went on that timeout, you were talking about some of the dynamics, looking at GDP and how that we see growth from, banking and insurance, whether it's mining, quarrying, and, maybe telecommunications. So I'd like you to take it up from there.
Yeah, but a lot of sectors are struggling. That's the reality. In the manufacturing and the real sector, there's not much growth there. And if you really want to get the level of productivity that we're looking at as a nation, then you also need to push the boundaries in those areas as well. I think you also highlighted inflation.
price dynamics.
Yeah, the price dynamics, and largely, the food inflation is something that we've not been able to sufficiently tackle, and this has various elements. There's the global issues that impact on supply, and then you also have the internal risks around, ramping up food production, as well as the security and getting the output down to consumers. So built into those prices are elements of risks that people undertake to get, their produce down to the market. And if we are unable to deal with that, then we'll continue to struggle in that space. Of course, energy continues to be a challenge with all the uncertainties around pricing, what sort of fuel and all that, and then all the increases in terms of tariffs also poses a significant challenge for us. I'm happy with exchange rate, though, and towards the end of last year, I was speaking to a few people about expectations of FX, and largely some of the things we anticipated are happening in terms of, we're not going to have that significant devaluation anymore. And if the central bank is able to manage... Talking
about this, we've seen the impacts on, that's the fact sharing. We see the impact. We see how that, exchange gains have reduced. And that has, of course, impacted what is being shared. So at the end of the day, we're still not in a good place, really. So it's not just about the fact that we've got the exchange rate sorted. Is it really structurally sorted, or what we just did was to put some, some codes and some measures in place to ensure that we manage what's happening there? Are we really, or have we really improved our capacity to earn foreign exchange? Oil and gas, so let's talk about energy. We know it contributes about 90%, or if not more than 90% to Nigeria's foreign exchange earning. And not only that, over 60%. So, Nigeria's revenue, we know what's happening there. So, I mean, how do we deal with all of this?
Yeah, so the only way to really tackle that, and, towards the end of last year, with the Trump regime coming on board, those risks were already glaring and staring us in the face. Because, Trump 1.0, there was clearly that indication that America must continue to ramp up production, and lesser commitment to the energy transition, which globally was in view. So with Trump 2.0, using that phrase that others use, America is now drilling, which means that drill baby drill, yeah. So production has increased significantly. And that has impacted
before you get to America, before you get to Trump 2.0 and global, challenges, I sort of wanted us to stay a bit on the domestic, local. And we can then move to global.
And we have to touch on the international, because the international means that the prices have been dropping. And the only way to fight that would be to ramp up production. So deal with the security issues. In terms of the oil and gas facilities and installations, evacuate the crude and get it to the terminals, and then export. Why? Because it still accounts for 60% of our production. So we are still massively at risk to the geopolitics, but domestically, I think some of the things we've seen in terms of reorganization of the NNPC suggests that the government is paying adequate attention to that emerging issue.
But the refineries they are delivering subpar, especially Warri refinery.
Absolutely.
Since January 25, shut down.
Yeah. So and good point, because you're talking about our earnings of foreign exchange, but a lot of it goes to importing PMS and petroleum products on the expenditure side. And we haven't been able to unpack that. So you're right, in terms of being self-sufficient, in terms of refining capacity, that has to be something that has to be in focus for us as a country going into the future. And of course, there has to be commitment from all the new players acquiring from the IOCs to ramp up production and make additional investments so that we get the crude up. But we cannot continue to rely on crude, right? Yeah.
Exactly.
So an exposure to an investment that gives you 60% of your return or your exchange earnings is, doesn't make sense to a businessman. We have to diversify our foreign currency earnings and invest in agri and the value addition within the agri space. We've not really cracked the surface in terms of, and I see that GDP growth in the mining and minerals industry is one of the high ones, but that's because we're coming off a very low base. And I mean, there's largely a lot of insecurity there, but even clarity around proven reserves, how much deposits do we have there that would attract the foreign investors to come in? And obviously we have significant lithium deposits in the north as well. And with energy transition, and you see all the conversations around EVs, around batteries and all that. And it's a critical space from a geopolitical perspective. And we have significant proven reserves in that space. But attracting the investors with clarity around regulations, clarity around what we call ease of doing business would be very critical. So in my mind, we need to significantly focus on diversification of our foreign currency earnings. Otherwise, we'll continue to be at risk and exposed to drops in prices. And then once the price drops, everybody becomes agitated. That's not the case. Yeah, we keep borrowing. And then on the fiscal side, you spoke about the debt servicing eating up more than your revenue. So those are significant concerns from my perspective.
Actually, now globally, we've seen policy shifts and risks sort of ranging from increased protectionism. We have the Ukraine-Russia stalemate. We have the Middle East escalation. We know what that is also, the impact that is also having on freight and some other things. Then we have the shift to renewable energy. Mm-hmm. We have commodity prices, global, capital market decline. Which of all of these do you think poses more threats to Nigeria?
I think the big one, the two that I believe poses the most risk from our perspective. The first one is the tariff wars, if I can call it that. And again, from the US, one of our, important trade partners imposing a 14% additional tariff on imports from Nigeria. Already, we're struggling with a trade deficit with the US. And what that therefore means is that Nigerian goods become more expensive when we get it out to American consumers. And you're in a global market and there's that competition. If other nations within Africa or elsewhere are able to give their product at lower tariffs, that gives them a competitive edge already. So we're going to see a massive risk from that perspective. Except if the government is able to unlock and go and negotiate, which would be challenging because
do you think Nigeria is even making a move to negotiate? I mean, South Africa has told us that they're trying to negotiate. What's the Nigerian government stance?
To be honest, I don't have much, enough information to. I've heard once or twice that there is an intention to go and have a conversation and to go negotiate, but I haven't seen enough. In terms of acceleration of those conversations. But maybe, do we have sufficient
negotiating power?
Yeah, bargaining chips behind in our back pocket to go and have those conversations? That's a deep question. So if we're able to unlock our mineral sector, and you've seen that from a global stage, mineral security, especially the rare earth metals, but even the energy transition metals like titanium, lithium, and so on, are significant geopolitical conversations and will get you a seat at the table. The recent deal between Ukraine and the US is largely based on that. Give me some security, but then I give you concession to be able to mine those minerals and that then guarantees security for the U.S. in terms of production of EVs, as well as defense weapons and so on and so forth. So if we had something like that, then that gives you a good bargaining chip. But on the fiscal side, we could also have some policy conversations as well. So we have this significant economic presence law that imposes tax on foreign digital companies. Now, when France did that in Trump 1.0, there was a reaction from the US by imposing prices on French wines, or tariffs on French wines. Why? Because when you do a digital tax, it's sort of assumed that the most focus will be the American big corporates, because they control the big digital companies globally, whether it's in the operating system space, whether it's in the online retail, whether it's in streaming video on demand, everything retail, they control most of the big players. So maybe we can have a conversation as part of the bargaining chip to steer things in our favor. But over and above, I think those conversations and negotiations are important, but you can't rule out the risk that in the future those shocks will come. So the best thing we need to do is to deal with the domestic side of things, diversify our economy, improve our crude production, and ensure the economy is working. So for me, I think I think the crude production is a bit more long-term, right? Because you need to make the investment, and then it takes a bit of time for you to work the asset and get it, to improve the production.
All right. I mean, we're pressed for time. We have just about a minute to go, so we can't overemphasize the risks, that this shifts post to the Nigerian economy. So talk to us. I mean, I think to a very large extent, you've talked about how the government can sort of navigate all of this. But what about businesses? What about Africa? Seeing that Africa probably, can use, can use the after opportunity to navigate this.
Yeah. And that's it's unfortunate, and it provides some of the geopolitical issues happening globally, provides an opportunity for Africa. I think what globally people have seen is that you need to raise the level of Africa to create a market that can compete. So if, for example, Africa had the purchasing power of a Europe with our population, then there wouldn't be a lot of conversations around this trade dispute. People would just change their approach and sell into Africa, and that's a new market for all their products, even if someone is raising tariffs. So that becomes an important thing. But even in terms of us working together and creating the similar to the ASEAN countries, where you create that value chain, looking at what each country can produce, what each person has competitive advantage on, removing that trade barrier or tariff barrier. You can source materials in one country, produce in another country, add value in another country, and then export. I think we can then create one market that looks like a one trade block, and that would raise the level of things from an Africa perspective. So AFCA and the implementation of AFCA would be very important leading into the future. But it's not about coming up with AFCA and all that. African countries need to get their act together in terms of governance and in terms of even looking after their citizens. So for me, I think that needs to be considered as well. So for companies, they need to plug into the Africa Continental Free Trade Agreement, obviously, but you also need to look at backward integration, particularly looking to source your materials domestically, and also plugging into that global supply chain. I always say this about Nigeria as well, and when you look at India plays the geopolitics very well. So they have a large population, they speak English, so they invested significantly in education, ICT and so on. So they're now a global outsourcing hub, for the global supply chain. I think Nigeria can go there because even wages are now quite low, and plug into that global supply chain, which will generate revenues on that side. So local opportunities are there, but companies and businesses also need to look at hedging the risks as well, particularly on the FX side. And how do you manage that? You know, you price your cost in Naira instead of dollars. You also look for opportunities to earn in foreign currency. And a lot of companies have had to do this in the recent times. And then cost optimization will be very, very critical. It's very inefficient to produce in Nigeria today. Some of the things are outside the control of businesses, so government needs to chip in. Infrastructure, energy, transportation, and the likes needs to be dealt with, especially at the port, the bottlenecks at the port.
Let's close with this. Is there light at the end of the tunnel, or is there an end to this tunnel?
There can be.
There can be. Yes.
No, I can't say yes that there's light at the end of the tunnel, because there's a lot of moving parts. And a lot of it requires responsibility from government, not just businesses. Yeah.
All right. Thank you. I think that's a good place to end the conversation. If we continue, there's a lot to talk about, but we have to end it here. Thank you so much, Kenneth Erikume, for your time and thoughts on the show today.
Thank you very much, Perpetua.
All right.